So we see with these 34 different covered call ETFs, a lot of them packed right in the middle, but there are some clear outperformers and, maybe more importantly, some clear underperformers. As a result, the key takeaway here is
what's up, you guys? Welcome back to the Average Joe Investor channel. As we near the end of 2024, I feel like it's the right time to take a look back at this year, the results for sure, but also historical years to see how these covered call ETFs perform both with respect to income, but also portfolio value. The reality is there are many different strategies to create income in your portfolio. Some of them require action by you to make them happen, such as, for example, selling options in your own portfolio. But at the same time, there are other strategies that do not require any effort from you. You can just simply buy the fund, sit back and relax, and just collect the income when it comes in. I'm not saying either way is right or wrong, because every investor is different, and every strategy as a result may or may not make sense for you.
So with that in mind, I went to stockanalysis.com and I looked at a list here of all of the top covered call ETFs based on their market capitalization.
Now, first off, what is a covered call ETF? These are ETFs that, number one, hold some asset, whether it's individual stocks, whether it's other ETFs as part of its assets, something in between there. But in addition to that, they also sell options in the portfolio based on that underlying asset to create income that is then distributed to investors. Technically here, based on stock analysis, we have 73 ETFs, but I didn't use all of them because some of them were based on individual stocks. So instead I wanted to set aside a different video for those types of ETFs and instead look at ones that held multiple assets for selling covered calls. So of these 73 stocks here, including JEPI, JEPQ, QYLD, etc., all the way down here, there's a lot of yield max that I did not use in this specific video. So I decided to break that list from 73 down to the 34 that made sense to review, and we're going to look at the historical performance over the past 6 months, over the past year, and over the past 3 years, both with respect to income, of course, but also capital value. And you guessed it, I built another spreadsheet. I never want to waste your time, and I always want to provide massive value for every time you click on a video. So with that in mind, let's dive into the spreadsheet. Okay, so this spreadsheet, just for your awareness, is available by joining the Average Joe Investor Patreon community. And if you have a desire just to buy this individual spreadsheet from me, you can certainly gain access by going to the link down in the description below. So this list, like I said, includes the 34 of them that made sense to review. I did not include any from YieldMax, and I did also not include any that have less than a 6-month history. And if we click back over here, you'll notice that if we sort this by inception date, there were a few here that were just recently launched. We've got like YieldMax Mara, you've got Rex Crypto Equity, YieldMax Targeted 12, YieldMax here. Any of these way through here. These ETFs, these ones right here, were not included just because not enough time available. I didn't want to look at 3 months, 2 months, etc. So I looked at minimum 6 months of returns. And you'll notice here, we've got one from Fidelity, FYEE. Then we've got one from First Trust right here. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 different ETFs from GlobalX. Some of them names that you've certainly recognized before, like QYLD, XYLD, RYLD, etc., but others as well. We've got one from Invesco. We've got 1, 2, 3, 4, 5 from iShares. 2 from JP Morgan, that's JEPI and JEPQ. 1 here from Crane Shares, which is one I'm sure most of you had never heard of. I certainly had not. We have 1 from Madison, 1 from Maine, 1 from ProShares, 1 from Rex, 3 from Roundhill, QDTE, XDTE, and YBTC. By the way, RDTE is too new. That's why I didn't include that one. SRH, and then Westwood right down here. We looked at assets under management right here. We can sort based on assets under management, current price, expense ratio, when the fund was launched, and their current distribution yield. And while we're on that note here, the distribution yield varies wildly here. We've got as high as 56.69% for Crane Shares and as low as 3.19% for DYLG from GlobalX. And just as an FYI to you, all of the historical price on a daily basis, and all of the historical distributions were pulled from Yahoo Finance. And like I said, the original list of these ETFs came from stockanalysis.com. With all these ETFs, I assumed a lump sum investment of $100,000 at the beginning of the period, whether it was the 6 months ago, whether it was a 1-year return or a 3-year return, assumed $100,000 was invested. The distributions were sent to investors and not reinvested. And all of the data, like I mentioned, that was tracked from Yahoo Finance is right down here at the bottom. All of these different tabs tabs include all of the historical stock data. So first off here, let's take a look at the 3-year returns, which covered from January 1st, 2022 through December 11th, 2024. And within that context, we only have 8 ETFs. Let me just sort this by inception first off. You'll see those right here. The ones that we're including here is PBP from Invesco. We've got XYLD and QYLD, FTQI, RYLD, JEPI, QYLG, and XYLG. All right, so first off, let's take a look at historical income here during this time frame. And this is cumulative income for the record. So cumulative income, the top 5 were FTQI, which generated 28,000, QYLD, which generated 27,000, XYLD, which generated 25,000, RYLD, which generated 25,000, and then JEPI, which generated $23,000. However, if you sort it by portfolio balance, we get a different result potentially here. Top result was XYLG and QYLG from GlobalX. That makes sense because these funds do 50% in options and the other 50% is unlevered, so it's going to grow more. So we've got XYLG and QYLG, then PBP from Invesco. We have First Trust here in the top 5 with respect to income and portfolio balance. And then lastly, we had JEPI right here. And so from a total return standpoint, factoring in all the income plus the portfolio balance, the top 5 here were number 1, FTQI, followed by QYLG and XYLG at 119 apiece. Then we've got JEPI at 118, and then down here at 113 was PBP. The worst result here for total return was RYLD from GlobalX. The worst result for portfolio balance was RYLD for portfolio balance, and then the worst for income was PBP at only $12,000. So it definitely was like half the amount of income as the others. But as you can see, there was a little bit of capital erosion here. This portfolio balance, we're not reinvesting any dividends. So it's just the capital value, not including any income that was derived. So of those funds, you'll notice here that 1, 2, 3 of them were worth more after 3 years than the initial capital being invested, whereas some of them were worth far less, and RYLD lost the most here at only $68,000 of value. Next up, let's take a look at the 1-year returns. This is all of 2024, so all the funds here would have to have at least a full 1 year of history. And so we're going to include the original 8, obviously, but that's also going to open up additional assets to look at here. That's going to open up an additional 15 different ETFs to look at here, including JEPQ, 2 from iShares, LQDW, TLTW, HYGW, BUYW, RYLG, TYLG, HYLG, FYLG, all of them from GlobalX. Those are more sector ETFs with some income. We had CLIP here, or Crane Shares, which is a weird one. We'll look at that. QYLE, DYLG from GlobalX, CVRD, and SRHR. Now, if we sort these based on income and then portfolio balance and then total returns, let's see how those compare to the 3-year returns for the ones that were included there, but also just overall. Top income results here over the 1 year. By far, number 1 here was Crane Shares at $35,000. Now, my first thought here was when I saw that much income was, number 1, did I get the data wrong? And I double checked and the data is right. So my next thought was, man, that must have been completely drained of capital value. There's no way you can distribute that much income and also retain your underlying value. But we'll double check just to make sure. Way behind here, we had LQDW at $12,208. We had CVRD at $11,886. We had QYLD at $11,259. And then we had FTQI at $11,133. There's a lot more here in the 10,000 range. And then the outliers here down here at the bottom were FYLG, XYLG, HYLG, and DYLG, all from GlobalX. Those are covered call and growth ETFs, meaning that it's kind of a split between growth and income, which means you're going to have lower income numbers but higher portfolio balance numbers generally than the others. Top result based on portfolio balance here were the ETFs I just talked about, right? XYLG, QYLG, FYLG, JEPQ actually made the top ones right here. We had TYLG right here. Those make up the top 5 based on portfolio balance. And if we look at the total returns here, they line up very much with the actual portfolio balance, 100%. Top result was JEPQ right here. So it generated pretty good income at 10,000, just below the other top 5, but it was also near the top on portfolio balance for a total return of 126 compared to QYLG right here at 124. Then we had 3 of them at 123. The GlobalX Financials, Information Technology, and S&P 500 covered call ETFs. Lastly, let's take a look at all of the ETFs, and then we'll also jump to look at some of the graphs of this data as well. We got the 6-month returns from June 4th through December 11th. So it's actually closer to 5 months, but we're just going to call it 6 months from June through December 11th. Top result based on income here. This is opening up all 34 ETFs for review. Okay, so top result for income by far was right here, CLIP or Crane shares, which is $20,000. We already know though that they drained a ton of capital value as a result. By the way, as you can see right here, like I mentioned, CLIP right here or Crane shares generated all that income, but look at that portfolio balance, only $69,000. So as I thought, a lot of that value was drained out from the asset. All right, so for looking at the income for 6 months here, top result, like I said, was CLIP or Crane shares at 20,000. We had 18,600 for QDTE. We had 17,602 for YBTC, which is a Bitcoin covered call ETF. Now you could make the argument, and I wouldn't necessarily disagree with you, that YBTC is a Bitcoin covered call ETF is based on one individual underlying investment and is much more concentrated, therefore might not make sense in this list, but I decided to include it anyway, just because. Then we had Rex AI Equity Premium Income ETF at $14,000 in income, and then we had Roundhill XDTE. So all three of the Roundhill ETFs made the top list for income. Let's take a look at portfolio balance here, although looking down here at the bottom, DYLG made by far the fewest amount of income. Most of the numbers for income were between $6,000 or $5,000 and $9,000 here in the middle. Portfolio balance, top result here, was FYLG, then DYLG, then MDST, FYEE and XYLG here between 110 and 112,000, although QYLG was also very close at 109. And we had a few more GlobalXs here, right here, that were very close to making the top 5. By far the worst result for portfolio balance here, by the way, is that pesky Crane shares ETF, which clearly was just distributing all of their income and some of their capital value as well, because we're down to 79,000. Above that we had 95, 97, 97, 98, 98, and then those ones were actually worth less than when we started after 6 months. But the top result, like I said, here were these top ones right here. All of these right here, most of them actually made money with respect to their portfolio balance. They're worth more after the 6 month term than when we started. And then from a total return standpoint here, top results were number 1, YBTC from Roundhill, the Bitcoin covered call ETF, followed by MDST from Westwood, 117, and then 3 of them here were at 116, AIPI, QDTE, and XDTE. So really good, strong results for the Roundhill ETFs, those 0 days to expiration covered call ETFs. All right, here's those 3-year returns here graphed. This is principal value only. We can see quite a bit of clustering right in here, but this pink one right here, which is our RYLD, definitely underperformed the rest of them. These other 2 outliers here were green and orange, were XYLD and QYLD. Again, this is portfolio value, not income. The top results here for income were clearly, for almost the entire time, right here in blue was in the top 3, PBP. Then in orange, we had QYLG, and then in dark blue up here, XYLG. Now, if we scroll over, we can take a look at the actual income, same ETFs, different metric though. This is cumulative income from 0 for the period. So all of them started at 0. One of them was much, much lower here in dark blue. This is PBP, though it did start to catch up right here about halfway through the period. Top result here was in light blue. This is FTQI, followed closely by QYLD. Here's a look at the 1-year returns graphed as well. More data to look at, more ETFs clustered here in the middle. One that looked just terrible based on the rest of them was, again, that Crane shares ETF, KLIP, which was worth far less than what we started. Started with 100, down to below $75,000. Down to below $70,000. Majority of them were stuck in the middle here, somewhere between 95 and 105,000. But the top result here was this dark blue, FYLG, followed by this one right next to it, XYLG, and then in purple, QYLG. Here's a look at that income for that same time frame. This is that Crane shares ETF that was massively high with respect to income, which is why I didn't even show the graph is so far different here, versus the other ones here were much closer, clustered together in the range of around $12,000 annually, between 10 and 12,000. Top result, or second result here, was LQDW, followed closely by CVRD. Worst performer here in dark green was DYLG with respect to income. And lastly, let's look at the 6-month returns. And this is a ton of data here. This is all 34 ETFs. You can see the worst performer here from the majority of the time was actually in this green here. This is YBTC or Bitcoin. And then it actually really took off after the time frame right around the election time, right in this range here. Went down in value from 100 down to nearly 70, and then popped back up here to close to $100,000. Whereas in dark blue here, we had this CLIP ETF, KLIP, which was way down around $80,000. Top result here in light blue was FY XYLG, although in pink, or like a dark pink here. This one performed well the majority of the time as well, SRHR. Again, this is with respect to capital value. Scrolling over to the 6-month returns for income, you can see one performer did really well here, which was in peach, or QDTE, performed well consistently during this time frame. It was outperformed here by this dark blue, which is KLIP, but again, this one terrible in my opinion based on the income compared to the portfolio value. And then in third we had probably Bitcoin YBTC right here, followed by AIPI, and then down here in XDTE. The majority of the assets here had income between $3,000 and $7,000. Now remember, when we're starting with creating income, we need to decide, do we want to do it ourselves? Do we want to sell options? Do we want to pick dividend stocks, etc.? Or do we want other ETFs to create that income for us? And when we're looking here at these top covered call ETFs, what we can clearly see is some ETFs are better at preserving value and generating some income, whereas other ETFs are great at creating tons of income and not so good about the preserving the capital value portion of it. Depending on what's more important to you, creating more income compared to preserving capital value over the long term is going to dictate which of these ETFs make the most sense for you. And this is of course if you decide for other people to create the income for you as opposed to doing it yourself. Again, if you want access to this spreadsheet, you can go to the link down in the description below to take a look at joining the Average Joe Investor Patreon community, or you could always make a one-time purchase to purchase this spreadsheet if you desire to do so. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many of the comments as possible on the day I post a brand new video. Always love to get your feedback, your questions, your concerns, your recommendations for future videos. That's all I got for you guys. Have a great rest of your day, and thanks for watching.